All right, welcome everyone. We'll get started in a minute here. I'll introduce myself to start. So my name is Dan Kang. I lead IR for Janover, ticker JNVR. Formerly a corporate strategy member at Kraken. Did about 3 years there. Prior to that, spent about 8 years on the buy side in long short equity. TradFi guy here. And with us today, thank you for joining, by the way. We've got Parker White, COO and CIO of Janover. Got Joseph Onorati, Chairman and CEO of Janover. And Marco Santori, board member, former Chief Legal Officer at Kraken. We've also got our intern on the line, who I have taken speaking privileges away from, and that is by design. So before we begin, I want to remind the audience that remarks during this Spaces event may contain forward-looking statements. These forward-looking statements are subject to risks that could cause actual results to be materially different. Those risks include, among others, matters discussed in Janover's current report on Form 8K issued this last Monday and in our filings with the SEC. We disclaim any obligation to update these forward-looking statements. So, with that, let's kick it off. Welcome, guys. Thanks everyone for joining. Dive a little bit into our agenda. I really want to just have a chat with our founders. So get them in front of you guys. Hopefully understand a little bit about their backgrounds, their motivations, and we'll start simple. Joseph, why don't you tell us a little bit about yourself? You've such a rich, interesting background in crypto and finance. What I'd love is for folks to just get a glimpse into who you are.
Yeah, sure. Thanks, Dan. You can hear me okay, right?
Yeah, you sound
I
great.
think so. Awesome. Hey, everybody. Thanks for joining. Yeah, I'm Joseph. I guess in, what is this, reverse chronological order on career stuff. I have been at Kraken for the last 8.5 years. I left 7 or 8 months ago and came back briefly as an advisor there. I joined Kraken when there were 23 people there back in 2016 and stayed through its growth to over 2,000 total team members now. Most recently serving as the Chief Strategy Officer there for the previous 2 or so years. I first got into crypto in 2013 when a friend of mine from graduate school, where I had studied economics with a focus on monetary theory and done some work on digital economies back then. They sent me an article on Bitcoin in I guess 2011 actually, but I didn't start working in it until 2013 when I joined CA Vertex, the first Bitcoin exchange in Canada. And they made me the CEO of that company, and I later sold it to Coinsetter. And then in between Coinsetter and Kraken, I worked with a few of my friends on a crypto market maker and OTC desk. Then back pre-crypto, I used to work in policy, think tanks, kind of lobby adjacent in Washington and New York. And I'd say I've been focused on the growth of individual liberty since probably 20 years now. And I sort of channeled that, I would say, into Bitcoin and a focus on sound money. Essentially, as soon as I found out that there were sort of businesses in the space, and that I thought, that I could meaningfully participate. And then more recently, broadened that focus on sound money to a financial system, a decentralized financial system that can support that sound money system.
Super helpful. Really, really, really cool background. So it's I don't know. I like to think of a lot of us at Kraken as being like really ideologically motivated, right? And it sounds like that's been like a really key I'm going to say motivator for you in a lot of your career.
Yep, absolutely.
Yeah. Before we move on to Parker, I'm going to throw you a curveball, go completely off script. You get to tell the audience here one like interesting off script fun fact about yourself. And if you can't think of one, I'll tell them one.
Oh, I think that this is on script, and I think you know what fun fact you're picking.
Go and tell them.
I don't remember what it is.
Oh, it's the bowl of vegetables. So Joseph here eats, tell him exactly like the breakdown of what it is you eat on a daily basis here.
Yeah, it's the Brian Johnson diet. Um, yeah, so I'm not a vegan, but my first 2 meals of the day are always his super veggie and nutty pudding recipes. I eat the same thing every day. I've been doing this since October. And the recipe is, as Dan knows, that I rattle off to him every once in a while, 250 grams of broccoli, 150 grams of cauliflower, 50 grams of shiitake mushrooms, 45 grams of dry black lentils, and a small amount of garlic, ginger, cumin, apple cider vinegar, and lime juice.
I love this. I love it. It's funny for those in the audience. Like, I asked Joseph. He mentioned weeks ago he's eating this bowl of vegetables, and normally you ask someone, "Hey, what's your recipe for this?" and they give you like a pretty bland response of like, "Oh, I saute this. I meal prep on Sundays." And Joseph literally listed every single macro line for line. I don't even think he said like a small amount of garlic. I think he gave it down to like milligrams of garlic or something like that. And I was like, this is something different. So, cool, Joseph. Appreciate the intro. Uh, Parker.
All
COO and
right.
CIO. Please give us your background.
All right. Well, I'll start off actually piggybacking off of Joseph's fun fact. So Joseph loves vegetables. I try to eat about 90% of my diet is meat. Um, so a little
Jesus.
opposite there, but I think we got a good thing going. Um, all right. So my background. Yeah, I come from a bit of a finance background. I'll go in reverse order to Joseph. So I'll start from the beginning. So kind of more of a finance background. I was homeschooled growing up, so kind of I guess an odd educational upbringing, if you will. My dad was super into a lot of the Austrian writers. So I remember when I was 12 years old, he gave me Hayek's Road to Serfdom. He was like, "Hey, read this," and I just ate it up, loved it. Um, and so from a very early age, super interested in, finance, kind of macro and general markets. And I was actually, I think, maybe the youngest person ever to get a Series 65 license at the age of 17 to be a registered investment advisor. Um, my dad called the SEC and FINRA and was like, "Hey, can a 17-year-old take this?" And they're like, "I guess." Like, we never had such a call.
You just did that. You were personally motivated to do that. Like that was a thing at that age you wanted to do.
Yeah, I was just very interested in that kind of thing. Digging into like modern portfolio theory, efficient market stuff. My dad was just like feeding me books that were interesting. So, um, then I was like, well, hey, what if I like got this license? Or I think he actually probably like raised it to me, and I was like, oh yeah, that sounds great. There's a test involved, some learning, education. So it seemed like a great thing to do. So after school, I worked on the buy side, helped build a bond desk at about a $2 billion institutional asset manager. Did a lot of bond trading, was the director of research and trading over there. Got my CFA during that time. But in 2017, kind of learned about crypto. And once I kind of really started to understand Bitcoin, not just crypto in general, was when it really clicked for me, because it kind of just like plugged straight into that Austrian lens of viewing the world, if you will. That kind of sound money, like, hey, we need to balance the budget at the federal level, kind of laissez-faire economics, all of that. Like Bitcoin just really clicked once I understood that that's what Bitcoin was. It kind of slotted into this existing worldview that I already had. So I had a little like algorithmic trading startup with some buddies in 2018. Then after the bottom fell out, they kind of got bored, and I was like still super interested. So that's when I joined Kraken. And was at Kraken for about 6.5 years. Held a number of different roles. Most recently, director of engineering, working on a lot of AI and ML initiatives. But kind of as we've moved into this new bull market, starting to look at some other opportunities. I've been a Solana bull for quite a while. Certainly love Bitcoin. Bitcoin is money. Bitcoin's great, but you can't do a whole lot with Bitcoin. You can send it around, and then you can trade it and do a whole bunch of things on centralized platforms like a Kraken. But the way I kind of see Solana is like a Kraken or a Binance, but on chain, and you can do so many more things. And you can use Solana, the asset or the network, and never touch Solana, the asset, or maybe a tiny bit for gas. You could do the whole thing trading Bitcoin and stables back and forth. And so I think Solana as this kind of financial infrastructure, global financial infrastructure, makes a lot of sense and is very exciting, and it works very well for that. And so as I've gotten deeper into the Solana ecosystem, just been super excited about the possibilities that it brings to kind of extend this sound money, this individual liberties, this universal property rights feature, or feature that Bitcoin brings to the world. And the Solana ecosystem really extends that, and allows you to do a lot more things. So I guess that brings me to where we are today, and super excited to be building Janover with the entire team.
Yeah, helpful overview. And a way to make me feel bad about myself at 17 years old. I feel like the only thing I was interested in was playing Super Smash Brothers and wasting a lot of my time, but getting a Series 65 was definitely not on my radar. So,
well, you didn't ask me about my KDR on Modern Warfare 2. So,
there we go. He is human. I am curious about that, actually.
Okay. Yeah, I think I kind of peaked out at like not so great, like a 1.4 or something before I gave it up once I turned 18 and started getting into hunting and real guns. So
yeah,
all right.
Super cool. And one last one for you before I turn it over to Marco for a little bit here. But 90% meat diet. Is this 90% beef, mix of beef, like what's like a typical meal look like for you?
I eat a lot of ribeyes, love ribeyes. Like a ribeye and an avocado is an incredible dish. I try to do that maybe 2 or 3 times a week. Eggs, sausage, for breakfast.
I've got to come up with like a hybrid of what you and Joseph are eating, just like one ribeye and one bowl of vegetables to start the day. That's like the way to go.
There you go.
All right. Well, thank you for that intro. And Marco Santori, do we have you on?
Marco drop.
He did.
Yeah, he was on.
Well,
we can come back to him if he joins again. I'll message him.
Yeah. All right. Well, let's talk a little bit about this venture. You guys alluded a little bit to some of your motivations here, but I think it'd be helpful for the audience to understand a little bit about what exactly it is that you're trying to achieve here with this, change of Treasury policy at Janover, what the mission is, and maybe some of the key motivations behind the business.
Yeah, I can jump in there. At a very high level, I think there's a clear problem in DeFi, and that's just very simply lack of capital, right? TradFi markets have trillions and trillions. If you look at real estate included in the bond market, I mean, hundreds of trillions in assets. And the DeFi market, we get excited about, 100 billion in TVL, or, whatever the peak was, globally, looking at EVM as well. And it's just, I mean, it's paltry, right? It doesn't even, it's a joke to people outside of DeFi. But the returns available within DeFi are just, off the charts, incredible. And the capabilities in the infrastructure is so much better. I mean, sending stables around is far better than sending a wire, for example. And so at a very high level, our mission statement is to bring TradFi capital into DeFi and to bring DeFi returns into TradFi. So bridge DeFi and TradFi. Now, we believe pretty strongly that today Solana is by far the best DeFi ecosystem. And so that's why we're building on Solana. Certainly, it doesn't quite have the TVL yet of the EVM ecosystem, but for anybody who's used both and doesn't have a financial interest in one or the other to shill something, I think it's pretty obvious that the Solana ecosystem is just a better experience all around. And so that's why we're supporting the Solana ecosystem, building on the Solana ecosystem, because ultimately, if we want to bridge TradFi into DeFi, we think DeFi is going to happen on Solana.
Yeah,
So I'll stop there.
super cool. I'll turn it over to Marco since he is now on. One, to quickly introduce himself, but two, maybe to tell us what was compelling to you about this story. Curious in those early days how those convos with Joseph and Parker went. Go ahead and say hi.
Yeah, hey everyone. Sorry about that, about dropping. I did get to hear everybody's diets for 20 minutes, so that was illuminating. I just couldn't jump in to share my own.
I'm gonna ask you your favorite food now.
Yeah, I'm a meat guy. I'm right there with Parker. I'm learning something every day here. It looks like he and I are going to be fighting over cows in the apocalypse because I eat about as much as he does. Anyway, hi everyone. I'm a lawyer, or at least I have been a lawyer for most of my career. I'm a director here at DeFi Dev Corp. I was a courtroom lawyer for the beginning of my career. I was up there litigating cases in state and federal court in New York City. I was litigating really the laws that I ended up advising on when it came to crypto. So all of the financial services laws. I got into crypto. It was just Bitcoin back then. In late 2012, I started representing my first Bitcoin clients in 2013. You can actually go. You can go to Bitcoin Talk and see some of my early posts. They are like the very definition of cringe. But it'd say, "Hi, my name's Marco. I'm a lawyer, and I'm looking forward to learning more about Bitcoin." And from there, I joined the Bitcoin Foundation, which used to be a thing. It was one of the most important and powerful forces in crypto because we were the ones who went to DC wearing suits and ties instead of, neckbeards and tutus. And we convinced the federal government that Bitcoin was good and there's nothing to fear here and you shouldn't try to outlaw it. And it worked. And as my practice grew, I changed law firms around. I went to Pillsbury Winthrop, where I was a partner, and Cooley, where I was a partner. If you guys have done work in crypto or in financial services, you're probably familiar with those firms. I led the financial technology team at Cooley, and I was also one of the inventors of the SAFT framework. I was one of the co-authors of the white paper near the end of my my term there. And you guys probably know what a SAFT is, a simple agreement for future tokens. It became like this market standard for anybody who wanted to sell tokens to VCs and then to the public. But when I left private practice, I went to be the president of blockchain.com, which then was the largest digital wallet in the world, I think, next to like Starbucks. It was the most popular wallet for Bitcoin. It was responsible for like a third of Bitcoin's transactions on chain at one point. Then I got a call from Uncle Jesse Powell, who says he wanted to build Kraken into a financial services juggernaut, and he wanted my help. And I said yes. And I spent the last 5 years as Kraken's chief legal officer. And that's how I met all these guys here at DeFi Dev Corp. And when Joseph first called me to see if I was interested in this, I was absolutely blown away by the simplicity of the idea. And he and I had a whole bunch of calls after that. And I was lucky enough to be asked to be a director. So here I am, and I get to be one of the team.
Awesome. Really fascinating background. Big underachiever, you as well, Marco. One day you might make it. Just hang in there. All right, Joseph. Maybe talk a little bit about again ideologically. You've like clearly crypto is sort of like in your bones here, but I'm curious what motivated you to pursue this, and talk a little bit about some important things you're trying to achieve.
I'm not sure that I have too much more to put on top of what Parker said already. You know, the mission here is to bridge TradFi capital into DeFi, DeFi yields into TradFi. Parker said this first, but I really like it. Is we can vampire attack TradFi with this business.
I love that. I love that. That's I think we have that on the banner of the intern account. Who, by the way, which one of you invited him to be a speaker? Because that is explicitly a thing I set out not to do at the beginning of this. And Parker, was that you?
He's on mute. I don't know. Maybe I accidentally accepted.
All right. All right. We'll check in on that in a second here. Let's let's maybe take a step back, because one interesting element of this, right? We've liked to sort of like refer to ourselves like the next evolution of MicroStrategy. But what's been interesting to me over the last few weeks, working with you guys, is it really feels like MicroStrategy is very controversial, pretty misunderstood. Just a contentious name, but they've obviously captured lightning in a bottle here with what they've done with crypto treasury and Bitcoin specifically. So I'd like to ask you guys, and anyone can chime in, what you think is fundamentally misunderstood about MicroStrategy, and what is it that Michael Saylor has done in your view that makes this treasury model just work so well?
Good question. There's a bunch of things here. I think what Saylor is doing, and I don't actually think, I've listened to a bunch of his stuff, I don't actually think he really realizes it. Or maybe he realizes it now, but certainly didn't when he set out to do this. It just was like, hey, Bitcoin's the best reserve asset, buy it. And he's kind of been pioneering and paving a way for, others to follow. But, I think ultimately what Saylor has done is pioneered a new asset class, or maybe a better way to put it is pioneered a new public markets vehicle or structure for digital assets. I think the ETF, it's a logical thing, right? Oh, like there's a gold ETF and there's an oil ETF and there's, a NASDAQ 500 or a S&P 500 or a NASDAQ ETF. So like, let's just stick Bitcoin in an ETF, right? That's the natural conclusion there. But I actually think that for digital assets, especially assets like Sol that have yield and you can have a validator and that kind of thing, there's some operations around it. I think the ETF is a very suboptimal structure. You don't put like a bunch of real estate, something that needs some operations, data center or whatever. You don't put that into an ETF, right? You put that into a REIT. And so I think actually what he's done is created the next evolution of financial market structure, or traditional financial market structure for digital assets. He's created something that is tailor-made, and he's kind of writing the textbook for it, right? But tailor-made for digital assets. And he logically started on Bitcoin. It's the largest, it's the most liquid, it's the kind of clear front runner and winner in the digital asset ecosystem. But I think it's going to become apparent that the Sol ETF is actually a suboptimal structure to hold Sol. It's actually better to get access to Sol via a public markets vehicle, an operating company, or just to hold Sol outright and maybe do some staking and some activity yourself. But just to simply take a bunch of Sol, shove it into a Coinbase custody or whatever account, in my view, is maybe a suboptimal way to get access or exposure to Sol the asset. And so I think that's, the most innovative part of what Saylor has done here. But if we look at the ETF, the lifespan of the ETF movement, if you will, that took a long time, right? I mean, ETFs were, I don't know the exact number, but I think coming out in like the late 90s, and it took 10 or 15 years to like really take off, and for actively managed mutual funds to really start to feel threatened and squeezed by the ETF movement. It took a long time. So I think we might be a little while here, and kudos to Saylor for paving the way. But there's still a lot of work to be done in terms of this new vehicle, if you will.
Yeah. Interesting. We'll definitely come back to the the subject of ETFs. It's like suboptimal in a second here, but curious if Marco or Joseph have any thoughts about misconceptions around MicroStrategy and things that are still generally misunderstood.
I guess I can jump in. One of the kind of objections that we heard when we were speaking to investors coming into the change of control for Janover was that many kind of crypto native folks don't understand why MicroStrategy trades at a premium to its NAV, and I think that was sort of it was probably the biggest kind of issue we ran into with the business model, and ultimately, I think the answer is the Bitcoin per share. I think MicroStrategy refers to it as Bitcoin yield, where if we look at historics or even MicroStrategy's forward forecasts, the amount of Bitcoin per share of MicroStrategy stock increases over time, and it increases over time to our understanding because they are able to essentially harness the volatility of Bitcoin and the stock to raise financing via their convertible debt that they then plow back into more Bitcoin.
This space was downloaded via spacesdown.com. Visit to download your spaces today.
And then once they already have the NAV premium, let's say they're trading, I don't know, $40 billion worth of Bitcoin on the balance sheet, but the market cap of the company is say $80 billion, so they're at a 2x NAV multiple. Whenever they're over 1, it's what, I don't know, we kind of nicknamed, maybe somebody else named it first, accretive dilution, for them to issue new stock and run their ATM, the at the market new share issuance, to purchase more Bitcoin to hold on the balance sheet, because that's always increasing the amount of Bitcoin per MicroStrategy share. And I think that is kind of the reason for the premium and the idea that there's this kind of anticipated growth in Bitcoin per share is the answer to why there's a premium.
Yeah, it's interesting. It sort of breaks my my old TradFi brain. For a while, I think I was in the same camp as everyone else, right? I would look at the underlying software business of MicroStrategy and say, okay, well, why would I give this any credit, right? It's not really, it's this legacy thing. It's, barely making any operating profit on a yearly basis. Then I look at the Bitcoin, add those two things up, and just say, like, this doesn't add up to where the equity is trading. I think, like, this idea of Bitcoin yield, there's you've aptly put it, just like Bitcoin per share growth, can almost equate it to EPS, right? Or earnings per share, which is to say, like, I don't know, you look at Microsoft or any other tech company, right? Like 5-10% of the market cap is sitting in cash, and no one says they're trading at like a, 10x NAV premium or anything like that. You're buying up these things because you're paying for the future accumulation of Bitcoin. And I think that's one of the, at least in my mind, misunderstood legs of the story, is that there's this third element of treating the Bitcoin per share growth or future Bitcoin accumulation in MicroStrategy as an earning stream. It's pretty fascinating. All right, so obviously Taylor chose Bitcoin. He's told us a million times it's the apex asset. It's better than anything. It's better than housing. It's better than cheese. It's better than your bowl of vegetables, Joseph. But like, you've had other companies in the space go after Bitcoin. GameStop with their recent announcement, MetaPlanet. You could have chosen Bitcoin, but you didn't. And Parker, you alluded a little bit to this. You talked about Solana a bit, but maybe let's peel this back a bit further. Why start with Solana?
Maybe Parker wants to jump on that one.
Sure. Yeah. Happy to. I think there's multiple reasons here. One, candidly speaking, we think this is the when I talk about the structure of a new form of an ETF, almost an operating company for a digital asset, I think it's kind of a winner take most or winner take all type game, because of the benefits of liquidity around a single vehicle, the ability to raise capital, the ability to have economies of scale in the holding of the asset, and that especially becomes more apparent when you have an asset that is has native yield and validator operations, that kind of thing. And so I think trying to do this on Bitcoin when there's a number of other players that are doing this on Bitcoin as well, smaller players, I think it's kind of my belief, a fool's errand. So, when we look around the ecosystem, what is my next favorite asset? And another kind of asset and corresponding network that has a lot of room to grow, in my opinion, and has a very positive impact on the world, or is going to have a very positive impact on the world long term, has a lot of staying power. Solana just comes up over and over and over when you kind of look at the crypto ecosystem through a bunch of different lenses, and you say, what are the most important networks on all these different metrics, whether that's developers or user growth or activity or rev or number of validators, all these things. Solana is like number one or two in most of those, or I'd say all of those categories, and very frequently number one. And so I think it becomes pretty obvious, like if you don't want to do this on Bitcoin, do it on Solana. And I think there's maybe even a case to be made that if we're starting fresh, there's no MicroStrategy, actually doing this on Solana still makes more sense. And that's because of the native yield, because of the validator operations, because of the ability to actually build an operating company and operating business around a Solana Treasury strategy. Whereas on Bitcoin, I guess you could run miners, but like mining is so competitive and very capital intensive. Otherwise, you kind of are left with what MicroStrategy is doing, which is just holding Bitcoin and doing capital allocation on top of it. But they can't really, I guess you can run Lightning nodes, but like there's not really an operating business to be had there. Whereas there absolutely is an operating business to be had around Solana.
Yeah, super interesting. And what's interesting to me, at least, is something Michael Saylor's talked a lot about is volatility is a key feature of the story, right? And he said before, like the reason a treasury strategy with gold doesn't make any sense, aside from it being inferior to Bitcoin, is because it's sort of like below the necessary hurdle rate on volatility, right, with respect to the S&P, both in terms of return and volatility. But I guess the question is, if like vol is so important, why not choose like Doge or Dog with Hat or something like that, right? Isn't this just a maximized volatility play, or do you think there's something else you have to consider when doing a broader crypto treasury strategy like this?
I can jump in again, but Joseph or Marco, feel free to just I'll pause for a few seconds before responding to these. I think ultimately you need to have belief in the underlying asset and the underlying ecosystem. Like, do we believe that Doge is going to be around in 10 years and like billions of people on planet Earth are going to be using the Doge network? I mean, maybe, right? Like if Elon keeps the meme alive, but like ultimately volatility is great, but volatility down is not, right? You need long-term, the trend needs to be up and to the right for the asset. And so we like long-term believe in Sol. Like I want to hold Sol for the next 20 years. And I think the Solana network is going to be far larger than it is today in 20 years. And so you got to build, you got to build your boat. You got to put your surfboard on top of a wave that is going in the right direction. And I don't really see a lot of other networks that I could very confidently say that about.
All right, I'll let down our intern over here and let him know that the whiff treasury strategy is not going to be a thing anytime soon to bank on. So,
For now.
for now, yeah. Well, look, hot off the press. Speaking of, announced this morning was the purchase of approximately $4.6 million of Solana. Obviously, we said at the start of this we won't comment on future purchases, but maybe talk about the broader timing of doing this now, given the overall macro uncertainty. Sort of feels like investors are jittery right now. Maybe Joseph can hit on the timing element a little bit.
Yeah, sure. Well, it's very hard to time the market, right? So I think now is as good a time as any, and Sol is way off its all-time high for sure. So that's a plus. But we plan to just continue accumulation indefinitely, and it doesn't really matter if we're at an all-time low or an all-time high. We're want to stick to the strategy.
This is what conviction sounds like, ladies and gentlemen. I love it. Cool. Well, let's pivot gears a little bit here. So we talked a little bit about MicroStrategy, treasury models more broadly. We've talked a lot about Solana here. Let's talk about validators. Maybe for our audience, just in very plain, simple terms, for those who may not know, explain what a validator does, why they're important. We actually got an audience question I'd like to answer at some point as a follow-up, but let's just start with the importance of a validator business and something like this. Again, recognizing that we signaled our intent to acquire one or more validators in the future, but have nothing to speak of currently. Maybe this is good for you, Parker.
Sure. Yeah, so I mean, ultimately a validator is akin to a Bitcoin miner. So, a lot of important differences, but ultimately a validator basically runs the network, right? All the network or the validators together comprise the servers, if you will, that run the network. And so you can kind of think like, let's say the Facebook network has a validator set of one, right? Or maybe they've got a few data centers where it's sharded a little bit, but like effectively they have a validator set of one. And that's just the database and the system, effectively the database and the computation engine that runs the Facebook network. For Solana and proof of stake networks in general, they have a decentralized validator set for the most part. There's a few kind of fairly centralized ones, but Solana is pretty decentralized in that regard. And so you've got all these validators that are all running the same code and validating the same transactions. And so without validators, you don't have a network. And so, I think long term, you're going to see every major financial institution that is utilizing the Solana network probably is going to run a validator or at least have some stake in a validator, because ultimately that's like kind of what runs the network and supports the network.
Yeah, interesting. I guess as a follow-up to this, like what makes one validator like better than another? I think the specific question we got was, why are your validators more efficient than Coinbase or Binance? So we won't speak to that one, but maybe we can talk about key differences out there.
Yeah, it's a great question. So there's a couple things. The first one is the obvious one, fees, right? So Coinbase charges, I believe it's 26.7% fee. And kind of the easier access, larger validators out there, the giant brand names, they charge a massive fee for you to stake to them. And that's, you're paying for the convenience, which is great if you want that. But if we take fees and set them aside, the other ways that Solana validators specifically compete is on performance. So mostly hardware, also a little bit of software tweaks that you can make, but ultimately, the rewards that a validator gets are based on how many transactions they can validate during their basically their time to validate blocks, if you will. So the way it works on Solana, before the start of the epoch, you've got the entire epoch mapped out. Everyone's got a turn, right? Each validator knows when they're going to go. It's at a very specific point in time. They're going to get 4 slots, each 400 milliseconds per block of time, if you will. And if you have a decent amount of stake, then you're going to get multiples of these kind of 4 slot chunks. And when it's your time as a validator to go, then the entire network at that very specific point in time is just hammering your validator with transactions. So actually, it's not all the validators validating all the transactions all at the same time. It's basically one validator validating the transactions for that very specific point in time, and then all the other validators are following along and confirming what that validator did was valid. And so when it's your time to go, you've got 1.6 seconds, right, for 400 millisecond slots to basically confirm as many transactions as you can. And so, top best in class hardware is very important. You can't just go on AWS and be like, I'm just going to use a server there. It just doesn't work. They don't have the servers available. And if you could get them to custom do it, it would cost millions of dollars a month just due to bandwidth costs. So you need specialized bare metal hardware. You want to be in specific locations. So the closer you are to the center of transactions, which is kind of a weird way to think about it. But if you were running a validator in Antarctica, there's no servers nearby you in Antarctica that are submitting transactions. And so you want to be typically somewhere in Europe, maybe New York is kind of the rough, somewhere in the Atlantic Ocean is kind of the rough center, if you will. And so the lower median latency to transactions getting to you means that you're going to have the opportunity to validate more transactions and collect more of those fees. And then lastly, because of best in class performance, best in class hardware, if you can just simply shove more transactions into your blocks, and this would be measured by compute unit, CU, then you're going to get more fees, more block rewards, more Jito MEV tips, more priority fees. And then if you're passing those back to your stakers, then of course that also results in better performance. So there's some nuance there, and I didn't cover everything, but tried to go kind of at least give some level of depth to kind of talk about the how validators can differentiate themselves.
Oh, that's a super helpful overview. And I guess for me to scratch my sort of investor itch over here, generally speaking, or what does the margin look like on a validator? Just we pick some random one out there. Are these high margin businesses?
Yeah, I mean, it depends on your stake, but the cost of a validator is fixed, right? So you got your server costs, you got your vote costs. Vote costs right now are about 2 SOL per epoch. So once you have enough SOL staked on your validator to cover those costs, then every incremental bit of stake that you get is 100% margin. So the giant validators out there, let's say your million SOL and up validators, the margin, the net margin there is, I mean, it's approaching 100%, because again, there's no variable costs involved in operating a validator.
All right, cool. Very helpful. I guess I want to maybe ask one more big picture zooming out question. Joseph, maybe you can tackle this one. But obviously, Parker, Marco, feel free to chime in with your thoughts. I'm curious what the implications are for crypto as just more, I'm going to say, treasury vehicles come online, right? As more folks start to put crypto onto their balance sheets and accumulate. What are some of the things you're looking out for? Do you think this is long-term bullish? What are some of the implications that general folks should be on the lookout for?
Yeah, well, my time frame might be longer than average on this. So about Bitcoin kind of first and specifically, I think the treasury strategies for these companies that are participating is long-term stabilizing for the price. It's going to reduce volatility over the long term because they're buying and holding, and as we build more liquidity and kind of financial instruments on top of the core asset, we should expect volatility to decline. And I think for Bitcoin to be mass adopted as a long-term store of value and potentially even money, then volatility kind of must necessarily decrease. And I think that's fantastic from a, I don't know, societal welfare kind of perspective. Maybe that's not quite the right word, like utilitarian point of view, because I think if there is a alternative to fiat as a store of value, or even better yet, as a currency, then there are these kind of enormous benefits that would accrue to practically everyone, a society or an economy. And then I think if we narrow that maybe to some of these other assets like Sol, then we have a similar situation where over the extreme long term, 10 years plus, maybe that's not extreme, but 10-year plus kind of time frame, I think we should expect long-term decreasing volatility, which should have positive effects on the network, because once we're at the scale that we may be at in that amount of time, then the cost of transactions will need to be forecasted in order for businesses to and individuals even to operate on these decentralized systems like Solana. So I think this is enormously positive in the long term. And of course, I think investors in these assets like Sol or Bitcoin, of course, benefit from the Treasury strategy approach, because it's just hoovering up supply essentially, and likely being very long term or essentially forever holders of those assets.
Yeah, that's helpful. Marco, Parker, anything you'd add to that? All right.
I want to hear from Marco. Marco, you got anything?
He does not.
Maybe
He's been blown away by Joseph's rant.
He's running to get a steak, I guess.
He's killing the cow.
Oh, sorry. I just don't know how to use mute buttons. I apologize. Honestly, the question that I keep getting asked, I think when I speak about this publicly, the first question I get asked is, "Oh, is this like MicroStrategy?" And we've talked that to death. But the second question I get asked is, "Why is this not an ETF?" Right? And the answer to both of those questions, I think, is kind of the same. It's that you can actually do stuff with Solana, and it's not something that MicroStrategy or anybody can do with Bitcoin. Not just MicroStrategy, right? But anybody can do with Bitcoin. And it's also just not something that ETFs can do, frankly, ever with any asset, right? Right now, the most avant-garde thing that's getting discussed in the world of ETF regulation is whether we can amend the rules to permit staking. Like that's as avant-garde as an ETF is going to get in the foreseeable future. That's as much as they're going to be able to do with the underlying. One of the benefits of being a public company that actually has business operations and can generate revenue, it's the flexibility to move and shake with what is going to be happening on these networks. So that next thing that happens on Solana, if it's really good for Solana, it's going to be really good for this model. And it's going to be something that we can benefit from, and that we can take advantage of out in the market and actually do stuff. That's not just and I say this lovingly because I'm a big fan, but it's not just a pet rock, right? Like Bitcoin is often being accused of being. And that's frankly, what keeps me interested in the broader application of this model to other networks, right? The MicroStrategy approach is really just about buying and holding, but for assets that actually do things and that you can do things with, this model is by far the superior one.
Yeah, I totally agree. And I mean, your point on ETFs is a pretty sound one. I'm sure we'll talk about that more in the future, but this idea of just what it is you can do with the underlying versus like a more passive vehicle. You're subject to inflows and outflows versus, this broader accumulation strategy. I mean, the cool thing is we saw, like, even with the advent of the Bitcoin ETFs, MicroStrategy has done incredibly well, right? Just by virtue of the financial engineering they've been able to put behind it. And as you also mentioned, it's not like they can really do anything with the Bitcoin. So some definite improvements that can be made. All right. Well, I want to save some time for some questions we got from the audience. First one here, maybe I'll kick this one over to Joseph. Where and how will you deploy the first $42 million of convertibles?
Sorry, I missed the beginning of that question. Was it where? And
Where and how? Where/how, I should say.
Oh, how much can I actually say? I'm learning to be a public company executive here.
You're doing a great job.
So excuse me. I think I have to say something vague, like we've publicly announced that we will deploy most of that capital into Solana.
that was a great job. As IR, I approve. Better than our intern chiming in and saying something else far more reckless. So yes, and I would add on to that. You've seen us deploy first chunk today, and that's what we've announced so far. Stay tuned. So it's question one. Question two here. Maybe I'll shoot this one over to Parker. How to think about what it is that you are building over at Janover / DeFi Dev Corp versus Sol strategies. It's an interesting one.
It's a good question. Well, I'll preface this by saying I actually, when I was at Kraken, I reported to, for a while, Max Kaplan, who is Sol Strategy CTO. And so Max and I are great buds. And so I won't speak ill will at all of them. But, I think there's a lot of differences. Obviously, the maybe the biggest one is where US NASDAQ listed, they're Canadian listed. And, kind of different philosophies on how this whole kind of thing will play out. And I think there's multiple different ways to kind of skin the cat, if you will. They've made a number of big validator acquisitions with, StakeWiz, Lane, and some others. And so, I guess like Joseph, I'm also learning to be a public company executive here. But, I think those guys are great. I think we're doing something a little different than them. But, I think if there's multiple public businesses that are doing this type of Solana operating company, if you will, I think it's better for the ecosystem and ultimately better for everyone, better for humanity to help Sol and the Solana network win and succeed. So,
All right.
Let me see if I can get away with this. I think that it will become evident that the strategies diverge as time goes on.
That's a great way to put it. Yep, I think they are actually pursuing a decidedly unique strategy. If you go listen to or different strategy, if you go listen to some of Leah's interviews.
Cool. That's helpful. All right, I'm gonna end us off over here one by one with a little bit of a word association game. So Joseph, we're gonna put you on the spot first, and the idea here is you say the first word that comes to mind when I say a word. All right. So if I said bowl, you might say vegetables, and we'll take it from here. So first word. You ready for this one, Joseph?
Sure.
All right. Crypto.
Freedom.
Solana.
DeFi.
MicroStrategy.
I don't remember my first word now. Sailor.
Second best.
Second best.
I like it. Volatility.
Is this still me?
This is still you.
Leverage.
All right, Parker, we're gonna go to you now. DeFi.
Also freedom.
Validator.
Yield.
NAV.
The net asset value. I don't know. I didn't prepare.
I love this. You're seeing me put the execs on the spot over here. I love this. All right, last two. I'm going to kick over to you, Marco. You ready?
Okay.
Crypto Treasury.
Bigger.
ETFs.
Ill-fitted.
I love it. All right. Thanks all for joining us. This has been an intro to our founders. Please stay tuned. Be on the lookout on our IR website for future announcements. We definitely plan to do more of these. If you have questions, please feel free to reach out, ir@defidevcorp.com, or you can tweet at us and or at our intern, but I cannot guarantee the quality of the responses. Really appreciate you all tuning in and look forward to chatting more in the future.